Well, hello, ladies and gentlemen. Welcome in to Trader Nerds. Real traders never trade alone. They trade with their fellow nerds. And we got Brandy with us today, who is a University of Alabama student. Does extremely well. She was really head and shoulders above a lot of people in my class. We got Chain with us. We got DB. We got Dwayne. We got Hal. We got Make the 111 great again. We got Mo. We got Vicky with a Y. Hey, y'all. Good to see you. And we were just scalping there. Scalped a little about, we scalped $240 on our last scalp. We're still down 60. This one took me down. I didn't get in it to start with. I got in probably in the chop here. And I probably should have got out at a small profit when it gave me the chop signal. But I ended up taking a loss. I got stopped out, $300 loss there. Had a great buy signal here. We just made 240 on. I could have made $50 here three times. It went up 50, made another 50, could another 50, and then it stopped me out at $300. So live and learn. I should have known when it had the chop to get in. And the rule should be get out when you get either your stop is hit or you get a different color candle. So I should have got out there and I wouldn't have made a $300 stop out. I got stopped out like right in here somewhere. So live and learn. We're still learning, right? That's the key. We're still learning. It was easy to be a good student in your class because it was the most fun and interesting class I've had so far, and I'll be done in the fall. Oh, that's awesome. Done in the fall. Isn't that great? And make sure you walk through the graduation. That is the most fun thing to, graduate from the University of Alabama with your degree. Now, Brandy, remind me, are you in the master's program or are you in the undergrad? You're in the master's, aren't you? I just got my master's there from in 2017. Started in 2015. Yeah. Yeah, that's good. The reason I went back for my master's is my boss came to me in Birmingham. I was perfectly content where I was, and he said, "Bobby, it's time for your evaluation." He said, "I got good news and bad news. The good news is you get all superior remarks, all superior marks on your performance." I was like, "Yay, what's the bad news?" He said, "You've maxed out in salary." And he went, "Ha ha." He giggled. And it was that little giggle that got me. I'm like, "No, you can't giggle that I've maxed out in salary." So I said, I've got to make myself more marketable. And that's when I went to the University of Alabama, got my master's. And sure enough, did get a better job because of it. And he was surprised when I left. My PhD is from the University of the Cumberlands in Kentucky, Williamsburg, Kentucky. Right after you pass the Colonel Sanders, what was it, Beth? The KFC Museum, Kentucky Fried Chicken Museum, the home of the first Kentucky Fried Chicken in the planet. And that was 4 years of crying and squalling. And geez, I don't know how I had. But the cool thing was the reason I went on for my PhD is because my kids got to go. Well, some of my kids got to go to my graduation. Some of them were too little, and we didn't think they could handle it. So we only took a couple kids to my graduation. It was cool having my kids at my graduation. I said, I'm gonna keep on going because it's kind of cool having your kids. When you're in the cap and gown and all that kind of stuff. They all went to my Kentucky graduation. That was really cool. And then when you get your PhD, you get that big old cap and gown, makes you look like you the stuff, like you just come in from Great Britain or something. What, Beth? Isn't it right? Beth said, "You sexy man, don't you ever die." That's what she said. Okay, so Brandy says, "I think I want to keep going, but I wasn't too interested with the distance options for PhDs at Alabama." Haha. Well, yes, that's a good thing. At University of Cumberland, you can do most of it distance learning. And I had a great uh, professor there who led me through the steps, Dr. Kenyon. He was very good. Except he did want to come to my house and eat one of my goats. And that was a little bit, he's from India. So, it's not like we could have brisket. He yeah, he wanted to eat one of my goats. That was not good. Okay, but anyway, we talking about a little bit of everything. Let's see what the market's doing. It's sharing old phone. That's a nice. I'm gonna listen to that when we get disconnected here. So let's see what's happening in the old market today. When I tuned in, it was plus zero. It was now we have gone up 46 points. Oh, be still my heart in the NASDAQ. And the E-minis up 20 points, 0.35%. Happy days are here again. Liberation Day is behind us. We're making deals. We're securing money coming in the United States from Saudi Arabia and Qatar or Qatar or however you say it. They giving us airplanes. We got all kind of stuff happening. We got the price of drugs about to fall, hopefully, which will be good because they are expensive, even with insurance. And it is, I hate government being involved in things, but, I start thinking if you can buy the same fat drug in Great Britain for $22 and it's $800 here in the United States, that's not right. So by God, you're going to sell it at the best price you sell worldwide right here at the old United States. So I kind of like that, even though I am a anti-government person as far as government needs, you know the purpose of government. Do y'all really know? Have y'all read Plato, Aristotle? Um, Purpose of government is to keep the people from rioting. It's really what the purpose is. I mean, it's basically to keep the peace, because that's why uh, Xi Jinping or whatever his name is over in China is a little worried about the Chinese economy. You can keep everybody under your little thumb as long as they got work and jobs coming in. When people ain't got jobs and they mad, they pick up pitchforks and they start storming the Capitol, and that's what pisses people off. So the purpose of government is to keep the populace under control, under the thumb, so to speak. And most of the time, it does pretty good at that. And every now and then, you get somebody who thinks they're God, and they start doing things that they shouldn't do, and next thing you know, your uncle is in the guillotine because you don't like your uncle, and things get carried away. So you got to watch that. But anyway, so the market is up. VIX down to 18 and a half. Look at that. AD 192. AD high 214. AD low is 24. And within the last 5 minutes, it has made the high of the day. Then it goes down a couple beats, and so does the market go with us. Remember, AD goes first. Then the market follows with the E-minis, and then NASDAQ. NASDAQ, you think has a life of its own. It doesn't. It follows the E-minis 99% of the time. You look at this chart and this chart, and you go, they're the same. No, one's the E-minis and one's NASDAQ. Let's look at our volume profile, where we have a little thing called the big green monster. Whoa, and behold, look at this. The 5936.5 is right where our 5940 is the higher value area high off of the point of control. We got the value area low. We got a big old gap down here. And nature abhors gaps, except in Stacey Abrams and David Letterman's teeth. And there are some gaps there. So what do we say? This is oversold for the fair value zone above. And there's two forces. Because it's oversold, it wants to go up. Let me show you where the natural attraction is for this to go. It's to the 6,200. Say it ain't so, Bobby. You bull. You bull man. But it also wants to be pulled right here. So you got two forces pulling on it here. And you got the point of control right here. So we'll see who wins out in the long run. So let's look at our linear regression chart. Linear regression for those of you in lower Alabama. And it's doing exactly what we said. And we're at 59.29. Remember when I said we're going to 5,800? You remember that? And I said I anticipate this lower pointing linear regression to straighten up. This is how it happens. It starts going outside of here. Now we can pull back to the area of support here, but unless we have tweets and Truth Social posts that would be contrary, which is definitely a possibility as we see around here, then we are up, up, up and away. Everything to me looks really bullish in this market. I'm a bull or full of bull. But it doesn't really matter because what we've been doing of late is we have been day trading. So Chain wanted to know, what are the rules of the day trade? Well, let's look at them. Because remember what I told you years ago, we've been doing this now about 4 years, I guess, in December. It'll be our 4th year of being on YouTube. You know, and we made a lot of mistakes in those times. But one of the things I've always told you is if you're trading without a written plan, then every trade you make is a dumb trade. So I've been making a lot of dumb trades, a lot of dumb trades. How come we didn't get a sale there? Looks like we would have got a sale there. So what I did is I went into Claude and I told him what we were doing. I said, Mr. Claude, help me make a trading plan. So let's go through the trading plan. Now I gotta do some adjustments on it to get it perfect, but this is a good first step. And Shane wanted this, so let's go through it. Trading plan combines linear regression candles, UT bot alerts, and consolidation zones to identify high probability entry and exit points for trading NQ and MNQ future contracts on the 1 minute time frame. The strategy uses technical indicators to generate objective signals while implementing proper risk management protocols for capital preservation. What do we trade? We trade NQ and we trade MNQ. Could we trade micro gold and gold? Sure, we could. Could we trade crude oil and micro crude? Sure, we could. We could trade just about anything. I like NQ because it moves a lot and I like the movement. E-minis are slow. And if you've been trading the NQ today, it's slow as molasses. It's just slow grind up. But I like NQ. It's got movement. Might we try on other symbols? Sure, you can do that. If NQ is having a weird day, then you could trade something else. The reason that I'm doing it where I'm at now is because I have to pay for data, for the live data, and I don't have live data on Tradeovate. So I'd have to subscribe to data that would give me the gold or the crude or whatever I wanted to trade. So I do have NQ data. 1 minute charts, optional secondary confirmation is 5 minute charts for trend direction. I think that's a great thing. Core trading hours 9:30 to 4. Initially, I said I wouldn't trade the 9:30, but friend, let me tell you something. If you did, you'd be done today. Let's look at this. Let's look at our signals today. I feel like I shouldn't be telling anybody this. It's like one of those things that goes, okay, that was a bad sell signal. Well, not really. I mean, if you'd sold there, you got stopped out, right? But then it would have come back. Had a great buy signal here. Had a pretty good sell signal there, an okay buy signal there. Look at this sell signal. Perfect. Look at this great buy signal right there. Here's the sell signal. I think, no, I didn't take that one. No, you might have got stopped out of there. You might have made a little bit. You would have got out at this candle here, right? Now, what's this buy signal? This buy signal. Holy Shimon. Look at that. If you'd have stayed with that. But where our plan tells us to get out is at the first time of a candle change. So we would have got there. 21,404. Someone get me in, let's say 323 to 404. What's that? 77, 81 points. $1,600 right there. So what if you stopped out one time or stopped out two times or stopped out three times? That'd be $900 down and then you're 1,600 up. These have a really, really good way. So this is the one that I could have got out for a little profit, but I stayed in too long and got out here and had a $300 loser. But then we got the buy signal and I made a $240 win. Uh-oh, now we've got a sell signal, but it's coming at the end of a consolidation zone. So you're in the consolidation zone. So it would be, not sure, man, if I'd take that, I'd be looking at your money flow. I'd be looking at your AD to confirm whether you want to go short here. All right. It's one of those iffy trades because it's within that zone. I'd much rather take it. Oh, and also you wouldn't take the sell signal here because you don't have a bar close below the white line. We need to let this line close below the signal line. This was not a closed line signal, so you would still not be in. You would wait until this one closes below the signal line. And right now it's having trouble doing that. Okay. So let's go back to the old plan here. A valid entry signal must meet all of the following signals. You must have a long UT bot generates a buy signal, or you get a sell signal. Very simple entry. Signal line confirmation. Long green linear regression candle must close above the white signal line, or as we just talked about now, the red linear regression candle has to close below the white signal line before you get in, even though you got a signal. Consolidation filter. Signal must occur outside of identified consolidation zones. Do not enter trades when price is inside it says blue shaded. I need to say white shaded consolidation areas. Signal validity, sign must remain valid until the candle closes. Entry is only triggered after candle close confirmation. Exit rules, exit positions when any of the following conditions are met. Long exit when a red candle closes. So you're long a trade. If you get a red candle close, you shut the thing down, even if you're at a loss or if you're at a profit. Short exit when a green candle closes. That's where I made my mistake a while ago. I forgot that this was in the plan. Now, my stop loss is a fixed 15-point stop loss from the entry price. That gives me one contract of NQ gives me a $300 loss. Time-based exit, I don't like this. Well, it's okay. Close all positions 5 minutes before major economic announcements. Most of those announcements do come prior to the market open, except on FMOC days and FOMC days, and those come at 2 o'clock on that Wednesday. Close all positions by end of trading session is still open. I think that goes without saying. Then it kind of came up with a risk management here. If you're doing a $10,000 account, you're trading one MNQ. Your maximum daily risk is $200. $25,000 account, you can trade 2 to 3 of those. 2%, about 5% down. If you're trading a $50,000 account, you could go one of these, or you could go up to 5 of the MNQs. If you want to keep it a little lower and risk $750 a day. $100,000 risk 1% a day. $250,000 you can risk $2,500 a day. Risk per trade is 0.5% of total account value. Fixed 15 points from entry. Position sizing formula. I got to look at that. Position size, risk amount. You're doing $300, $30 on the MNQ. Daily risk limits. Maximum daily risk is 1 to 2% of your account. You don't want to really risk more than that on a daily basis. I liked what it said here. If you get consecutive losses, stop trading after 3 consecutive losses. I'm done. Jesus, that's not working today. Daily loss limit. Stop trading if daily drawdown exceeds 50% of maximum daily risk. That's interesting. If my daily risk is whatever 100%, it says that's interesting why it would say that. Weekly loss limit, reduce position size by 50% if weekly drawdown exceeds 3% of your account. Trade management, partial profit taking, option to close 50% of positions at 15 points, which is a 1-to-1 risk reward. That's okay if you want to do that, but 50% of your position, most of the time I'm just trading one contract. Scale in approach, enter with 50% of planned position side, add that after price moves 5 points in the favorable direction, adjust your stop loss. Trailing stops, I do those manually. Move stop loss to break even after price moves 15 points in a favorable direction. Further trail stop loss at 50% of favorable price movement beyond 15 points. Performance metrics and goals. Win rate target is between 40 and 50%. Risk reward, target a minimum of 1.5 to 1. Profit factor, target a minimum 1.3. Maximum drawdown keep under 10% of account. Absolutely. We don't want to do over 10% of our account, even on a couple weeks basis. If we do that over a couple weeks basis, we need to reevaluate our plan. It's probably not working. Performance goals, consistent execution of the trading plan, regardless of P&L. And that way that gets your head out of it. You go, okay, I took all the rules. I took the trade. It stopped out. Okay, I still am a successful trader because I followed the rules. Positive expectancy should be over 15 trades. We should have a positive expectancy and growing our account monthly, 3 to 5% account growth. I would love that. That would be great, wouldn't it? We could do that. Review and optimize strategy parameters every quarter. Trading journal requirements. We've not been journaling our trades. Maybe we should keep up with these. Document the following for every trade: the pre-trade date and time, entry price and direction, initial stop loss, position size, risk amount, screenshot of setup. Post-trade, exit price and reason we got out, P&L points and dollars, notes on trade execution, my emotional state, adherence to the trading plan. That's really important, even on those losers. If you go, I went by the trading plan, but I still got stopped out, you can still give yourself 10 on the trading if you adhere to the trading plan. Daily summary, total trades taken. And Trade of 8 keeps up with that very, very nicely. Win-loss ratio, total P&L, mistakes and lessons learned, plan for improvement. It gives us some sensitivity that you can change the settings on the UT bot linear regression channel. I'm not really interested in making a lot of adjustments to those. I'll probably have that removed. But this is good, a daily preparation checklist, review economic calendar for high impact events. And I get the email from Scott Rubel every morning that tells me who's speaking and what time for the Fed speakers. It tells me all the economic reports and the times that those come out. Is very good. Check pre-market NQ movement and volatility. Confirm strategy parameters are appropriate for current market conditions. Ensure your trading platform and internet connection are functioning properly. That's really important. And really, you got to make sure that you've got a phone backup and that you know how to get out of trade if your internet goes down. Review your previous day's trades and lessons learned. Calculate maximum position size based on your account value. State daily profit and maximum loss limit. Rules for adjusting the strategy. It's got some VIX adjustments there. That's fine. In choppy markets, reduce position size. That's hard to do when you're a one contract bandit. Periodic review, weekly calculate your win rate and your average risk to reward. Monthly analyze trading journal for patterns. Quarterly back test with adjusted parameters. Psychological guidelines. Only take trades that meet all your criteria. Never overtrade the strategy rules based on emotions. And that's hard, y'all, because most of the time we will not be in trades. Most of the time we will be sitting like a sniper ready to take his shot. Stick to position sizing rules regardless of previous outcomes. When I was playing a little bit a couple weeks ago, I was like, I'm down $1,000. And I went up to 5 contracts and got it back quickly. And I go, would I have done that with real money? No. Look at this. Take a 30-minute break after 2 consecutive losses. Go smoke you a Camel or a Lucky Strike. Take you a walk around the block. Go pet the roosters, milk the goats, whatever. Celebrate process adherence, not just profitable trades. That's why when I took my stop loss today, I was like, hey, I followed the rules. Well, I didn't because I forgot one of the rules was when the candle changes, you go ahead and take the loss, even though it wasn't a stop loss. Practice mindfulness for 5 minutes before the trading session. That's just letting your mind just kind of cool down. Continuous improvement. Review trades weekly to identify patterns. Record your adherence to a plan. Scale 1 to 10 for each trade. Identify 1 to 2 areas for improvement each week. I've already identified improvement for myself. I should have got it out when the candle changed colors rather than taking the full stop loss. This provides a comprehensive framework for trading NQ futures using our combined strategy. Strict adherence to entry criteria, exit rules, and risk management is essential for long-term success. Remember that consistent execution of the plan is more important than individual trade outcomes. Can I follow the plan? most people will not be able to follow the plan because most of the time you are on the sidelines waiting for the sniper to come out. Review and adjust the plan quarterly based on market conditions and how you're doing performance. Our edge comes from a combination of linear regression candles for price action analysis, UT bot alerts for trend identification, and consolidation zones for avoiding the choppy market conditions. When followed consistently and with proper risk management, this approach provides a structured method for capturing short-term price movements in NQ futures. Isn't that great? So I will work on this and then I will paste this. I'll put it in a Word document, and that way you can make it yours and change it up and maybe even put your contract size in and everything. So, but that's a pretty comprehensive plan now. So now we got a plan. Now all we got to do is follow the dang plan. All right. Okay. So here was a buy signal. It was forming a consolidation zone. You see that, even though we don't have this yet, it was combined consolidation zone. You would not have taken the trade here. You would only taken it after the thing done here. You would have likely got stopped out on that trade. But remember, I would have probably not taken that trade, probably because it was forming a consolidation zone, evidenced by the green line and the red line. Support and resistance a little bit choppy in there, right? Even though the gray part's not formed yet, probably wouldn't have taken that trade. So now you could take and go, hey, the 15 seconds, give me a sell signal. You can take these as well, but really the bread and butter is going to be on the 1 minute. All right, that's our plan, and we're going to stick to it for a while. So we'll see how it runs. Y'all have a good rest of your day, and I will be gone.